Welcome to Investors Insights. Our topic today is government shutdown. Is that a possibility? What's the impact of that? Several of our clients have been asking, and we've got information for you today. I'm thrilled to come out of a great meeting here with Bobby Norman, Trey Booth, and Ty Miller. And the dialogue, discussion, and debate was fantastic. Guys, thank you for all the research you do, and I thoroughly enjoy our meetings. That said, let's share some of this information with our viewers. And so, Bobby, let's start off with you because here we are talking government shutdown. But in relation to earnings, I think you've got some good insight there.
Yeah, so with the market having to deal with the uncertainty surrounding tariffs and stubborn inflation, it's as important as ever that corporate earnings come in at or higher than expectations. So with nearly 80% of fourth quarter reports completed, as you can see in this chart, the fourth quarter earnings per share growth rate of 15.3%, seen highlighted in the top right of the chart there, is on track to be the strongest since the post-COVID rebound that we saw back in 2021. So 9 out of the 11 sectors are surpassing initial sales and earnings estimates from January 1st. With materials being the only sector falling short in both of those areas. So sales growth is expected to reach 4.9%, which, while strong, aligns with the year's overall sales growth trend. So this is a positive trend as the market is dealing with some headwinds right now. But while the current earnings season is positive, we are, however, watching operating margins pausing, which is something that historically has been followed by muted market returns. And so you can see in this chart that estimated next 12-month operating margins for the S&P 500 companies have stalled. And that has historically led to market weakness. So while earnings growth are beating expectations, it's great to see. We cannot ignore that operating margins have stalled. So it is something that we'll continue to watch carefully here to see if that trend continues.
Well, and it's why we use the word navigate a lot in our vlogs, because here you've got the positive information, but the operating margins, where's that going to take us? And you guys do a great job in terms of staying on top of that and navigating through it. And with that navigation, Trey, then we got into the DC policies, I guess I should say, and what's going on there, which then ultimately could tie into government shutdown. So give your insight on what you're seeing out of DC.
I think last week the market's reaction confirmed that Washington is hitting Wall Street. We kind of had a lot of headlines, but not a lot of action that have really kind of stood the test of a market week. And last week the market really sold off on what seemed to be good news. But the Senate passed a budget resolution, which is necessary to move forward with any kind of agenda. You have to pass a budget resolution, also to continue government funding to avoid a government shutdown. So now that the Senate has that joins the House that had already passed a budget resolution. The trouble is the Senate's version says nothing about taxes. So no continuation of current tax law, no adjustments, which is in stark contrast to the House's, which is nearly wholly focused on extending current tax law. So the two could not be more far apart. And I think that uncertainty really kind of spooked Wall Street last week. But it's a reminder, though, that this is going to be messy. Passing major legislation is never easy. And in D.C., that's the sausage making factory, and Wall Street doesn't like to watch how the sausage gets made. It just wants to hit it on the store shelf. But this is going to be a fits and starts process. The good news is, while last week there was a liquidity drain and some headline risk out of DC, which pulled markets back, this week we expect the opposite. And I'll pull this chart up from Strategas, which shows the liquidity being added. And that what liquidity is, that's cash. That's money that has been printed. That's going to hit the economy this week to the tune of $150 billion roughly over the next 7 days. And that's coming from the Treasury General account. Now, people that have been watching this vlogs have heard us refer to this account many times in the past. That's effectively the bank account for the federal government. It sits out of the banking system. It's the rainy day fund for when we hit debt ceilings, so the government can keep spending money without having to borrow more money. And so this is the federal government spending that money, that piggy bank down. And we're expecting it to be a large chunk next week, but then it's going to continue throughout all the month of March, which should be a good tailwind to stocks put downward pressure on yields, which puts upward pressure on prices. So net, that should be a positive. And hopefully that will overwhelm the headline risk of the fits and starts of what's going on in Congress in terms of trying to get a bill passed.
So great insight. So still a lot to come, and not just over the next week or two, but probably throughout the rest of the year. You agree with that?
Yeah, absolutely.
Yeah. So, and we'll keep everybody informed about that, because what's coming out of DC can also impact corporate earnings and economy. But that said, is that Ty, you jumped in this debate this morning and said, well, government shutdowns, and I'll let you finish the sentence because I thought you had great information on that. How important are they? Go ahead.
Yeah, well, to start, we've, of course, already hit the debt ceiling. And as Trey just alluded to, there is some conversations ongoing, but the two sides are, kind of far apart right now. And so on March 14th, the current continuing resolution expires, and without renewal, the government will shut down. Is it possible that they come to a deal before then? Of course. But right now, we're under the assumption that's not going to happen. There's according to Polymarket here, there's as you see in this chart, a 65% chance that the government does not reach, any kind of deal before March 14th, and there is a shutdown. On the good news, that's down from 77% just a couple weeks ago, but still 65% better than not chance that the government will shut down. So how does that kind of affect things? Well, the good news is not really. It's a lot of headline risk. It's not really a lot of market risk or a lot of stuff that's going on. Of course, this is looking back in time. This time could certainly be different. But if you look at this chart, since 1990, anytime that we've had a government shutdown, the S&P has performed just fine, actually up. Gold hasn't seen a big change. The U.S. dollar hasn't seen a big change. Yields have maintained. Even in 2018, we had two instances. We had a 2-day one and a 34-day one, which is the longest time span. And our research partners are saying that, if we hit this one, it could be a longer, time before we resolve it. 2018 was actually the best performance. So government was shut down for 34 days. The S&P was up 10%. So something to, certainly keep an eye on as we move forward. And so again, not a guarantee to happen. A lot of things change quickly in DC, but right now we're under the assumption that the government is going to shut down on March 14th. And we're also under the assumption it probably doesn't matter that much.
Well said. And I hope everybody circled the date March 14th. And also, this is why we do these vlogs, because if the media may grab a hold of this topic and just pound on it and make everybody have anxiety, but the reality of it is this too shall pass. We'll get it worked out. And in the interim, things can move forward and still be positive based on historical data that we've seen before. Correct, Ty?
That's right. Based on the past.
Right. So, folks, we're going to continue this discussion on our vlogs. We're going to continue it in our social media, LinkedIn, Twitter, Facebook, on our podcast, on YouTube. We also are available all the time to talk one-on-one with you, whether in person, in Zoom, also on the phone. There's just a variety of ways we can do it. We want to be cutting edge here. As we like to say, high tech, high touch. So we hope you have a great week. We hope you share this vlog with others who may be getting anxious about government shutdown. And know that we've just celebrated our 20th anniversary here at File Plan Partners. And we're very proud and honored to be working with you. We want to every day strive to make life better, richer, fuller for you, your family, and those around you. Have a great week. Talk soon.